Good morning, good afternoon, fintech and financial inclusion enthusiasts around the world. You're welcome to another edition of your special podcast, Africa Fintech Podcast. My name is Ajetumobi Olumayowa. I'm your host today. The guest on this program today is none other person than Mr. Francis Ogbuka. Mr. Francis Ogbuka is the Vice President Sales and Business Development of TechZone. He will be the guest today speaking on a special topic that concerns each and every one of us, which is majorly on blockchain and financial inclusion and fintech in African financial services. Mr. Francis Ogbuka, you're welcome to this program today.
It's a pleasure to be here. Just to point out, I'm the Vice President of Sales and Business Development at Zone, not Tech Zone. Felt it was important to make that correction. I come from an extensive background in payments and fintech, spanning over 30 years. Like you rightly said, I currently work as Vice President, and what that role entails is really spearheading all commercial operations for Zone, as you would have it. At some point in my career, I became privileged to begin to explore blockchain technology and its impact and how we can accelerate economic parity, financial inclusion, particularly as it relates to financial services. And I'll be happy to share some of those insights with you today.
Thank you very much. Our topic today is how blockchain is solving Africa's financial problem. And I think it's a very important topic for us to delve in. Mr. Francis, some people don't know anything about blockchain technology, not to talk of knowing how it affects our traditional financial systems. Can you please take us into what blockchain technology is and how does it really affect our traditional financial system?
All right, thank you. So I'm just going to use some simple analogies to try to break it down as best as I can. From a definition standpoint, blockchain technology is a decentralized digital ledger of immutable records. So what it means is that as you typically have with any digital system that archives information, most of those systems, most of those platforms are centralized. They actually hold centralized records. But in blockchain, what we get to see is a scenario where different nodes, as we call it more blockchain speak, hold identical copies of a digital record, and it could be for any event at the point in time that particular record is happening. So, take for instance, I'll use a football game, for instance. And with most sports events, you have a football game, you have 11 players on the pitch, and most of those games are usually, or the games are traditionally being officiated by, you have a referee and you have the linesman. Now, the reason you have the referee, the reason you have the linesman is to ensure that there could be transparency and there could be rules governing that particular game and everyone adheres to it. Now, if you were, and I'm not saying that there's a use case for that at this time, but if you were to apply the concept of blockchain technology to a typical football game, what that would infer is, say, for instance, a goal has been scored by a team against another team. Every player in that team immediately gets sort of like a notification or a record. And you could just say, okay, maybe every player is embedded with some sort of VAR chip or with a handheld device that immediately notifies them that that particular goal is actually a goal and that particular record cannot be tampered with. So that's sort of like what the blockchain technology does. And there's several use cases. So with what I have just said now, you can also assume that when it comes to elections, I know the United States presidential elections are currently ongoing. When it comes to elections, blockchain technology can actually help to solve that. in that every single stakeholder in that particular network, in that particular setup, can be guaranteed of the authenticity of the record of the record that you can get in that particular setup. So that's what blockchain technology does. As we go on, I'll be speaking more to how that applies to financial services. But in a nutshell, the whole financial services system, as you have it globally, is being facilitated by intermediation. So what that means is you have banks, you have fintechs, you have asset managers that typically act as intermediaries for anyone who wants to either save or invest or engage in some sort of trade of a digital asset. The blockchain technology helps to provide transparency. It helps to ensure that the records here you can rely on it at every point in time. And last but not least, it also reduces the cost for the processing for some of this operational processes. So, in a nutshell, that's what blockchain technology is.
Thank you for that insight into what blockchain technology is. Let us get a little bit practical with the industry that we belong to. And I'm going to ask you these questions. It's going to be in twofold. Um, in what ways do you think blockchain technology can be used to improve financial inclusion in Africa? And the second thing is, how do you think blockchain is also going to help to reduce the cost of cross-border transactions in Africa?
Okay, so I would look at both in twofold. So for blockchain technology, I'm going to start with the second question for cross-border transactions. Now, the major issues we've experienced today with cross-border transaction, for example, we're still experiencing is an issue with the speed of the transactions. You have one that applies to the speed. You also have another one that has to do with transparency for cross-border transactions. And for the providers, they also experience an issue with liquidity provision. Typically, when, say, for instance, say you're in New York, I'm in Lagos, I want to send money to you. I'm a business and I want to send money to you in another business. I'm going into the bank or using any digital platform that's provided to me by my bank, right, to facilitate that transaction. What's typically going to happen is that my bank is going to either take value from me in the local currency for my country, or they're going to request that I provide them with the value where I want to transfer in the destination currency. And when the destination currency is not available to me, they will request for me to provide that to them in USD, which is typically the globally accepted currency for trade. But when I do that, my bank or my financial service provider will be expected to maintain a correspondent banking relationship. And typically, for most banks in Africa, they maintain such relationships in either New York or in London. So they typically be expected to do that. Facilitate this via some form of telegraphic transfer to ensure you can get value. So I send a transaction to my bank would send it to their correspondent bank. The correspondent bank would need to then send that to the correspondent bank of your own bank, and your bank will look at that and confirm value to you. This particular scenario I've just illustrated can take anywhere from 24 hours to 72 hours. So we have those sort of constraints. The other issue with this is there is no guarantee that you can even confirm the payment details you have shared with me, the account details. There's no guarantee for me to confirm that. In some cases, you get to see that certain transactions you've initiated are returned back as unsuccessful transactions after 5 days of carrying this out. Now, what does blockchain technology do? Thankfully, through innovation in blockchain and what we have seen, we are now beginning to have digital assets of blockchain technology, and we're then beginning to have stable coins as well. What stable coins does is that it enables participants in a typical cross-border payment network to facilitate payments instantaneously from one party to the other, right? And that way, all the intermediary steps that typically require the traditional cross-border payment transactions are eliminated. So you're able to have transactions that can be facilitated more speedily. And these transactions, of course, just given what I've just spoken about, yeah, these transactions can also be much more cost effective. Some of the very popular stable coins some of us will be familiar with today are USDC, USDT, and I'm fully aware that a couple of cross-border registered and licensed cross-border payment networks are beginning to explore, this sort of tools and this sort of methods to facilitate these transactions. So yeah, that's one thing I think we can benefit a whole lot of from in Africa. And for the second question, I'm not sure I quite got that. I think I missed. I need to two-part
Uh,
question. Take that.
it was on how blockchain can help with financial inclusion in Africa.
Right, got it. Okay, so I think when you look at Africa and you look at Africa's populace, you begin to compare our demographics and our peculiarities with the rest of the world. Today, Africa, particularly sub-Saharan Africa, has what you may refer to as the least educated population globally. And what that does is that of course, you're excluded from a lot of traditional rails where you can access credit and the rest of that. Now, the primary reason we have seen why we still have a very high, shall I say, very high percentage, a very high ratio of financially excluded persons in Africa can all be attributed to trust, right? So we have a trust deficit today, as you would have it with financial services and with financial service providers. You get to find, I mean, take for instance, you can even sort of mirror in on Nigeria, and you can say there was a time when we just had the commercial banks offering financial services. And at some point, we felt that the market had reached the maximum you could get for this particular market. And then came in mobile money operators, came in fintechs, and we began to see that there were still a whole lot of financially excluded persons who wanted to be part of that formal financial setup. And then what blockchain technology could do, particularly for financial inclusion, is that it could reduce this trust deficit. Typically, with payments, we have a lot of intermediary issues. When you look at traditional digital payments today, you initiate a payment today, and there's no guarantee that that particular domestic payment is going to get to the third party you have initiated it to. Blockchain technology, and this is one of the use cases we saw for in Zone. Blockchain technology can actually solve for that, providing visibility between both service providers in such a way that the end users can be sure that whenever they go to a merchant's location to pay for an item or they go to an agent to draw cash, that particular transaction is going to be successful. It also helps with ensuring that the financial or other non-traditional methods for which you can appraise a particular individual to access credit can also be brought on chain, and that visibility can be replicated across several financial service providers. So, by solving issues relating to payments, by bridging the trust deficit, and also bringing visibility into non-traditional forms of appraising individuals for accessing credits, blockchain technology can indeed solve for financial inclusion gaps that we have today.
Thank you very much for talking about financial inclusion. And in your explanation, you mentioned a very key word when we talk about financial services, and that word is trust. Trust is really needed in the financial service industry. Well, let's talk about security because you brought in the issue of trust right now. So, the question I would like to pose to you is now: how do you think blockchain can help to reduce fraud and enhance security in financial transactions? That's the first question. And what security challenges do you think um, blockchain is really associated with, and how can this be solved?
Okay, so speaking about technologies or particular tools or methods that blockchain technology is able to, some of the properties, some of blockchain's properties that actually ensures that we can have more secure records as opposed to other centralized system is its cryptographic properties as you'd have it today. Um, Now, compare with, and I'll be relating this mainly to payments, as we've seen. Now, in typical payment systems, you also have cryptography, as you would have it, especially with EMV systems. Now, blockchain technology sort of adds an additional layer to this, in that through the particular cryptographic algorithm for which records are being hashed and added to the chain and replicated across, it makes it almost impossible for records to be tampered with. So, um, traditional payment system, traditional financial services system typically operate in a store and forward fashion, wherein a particular event has happened. I store that on my own system and then I push that to a particular third party who's relying on that information for them to be able to orchestrate different other financial services. Now, with blockchain technology, that's not typically the case. What you have is as records are being generated or created in real time, this is being replicated with other parties in that particular network. In real time, this has been added to the network, and you have this record is now forming part of the chain. This is only made possible through cryptographic hashing, and that's what you have significantly with blockchain. Now, when you talk about fraud, I think the most prevalent thing we have seen with fraud, it typically occurs a lot with payment. You have someone who's gotten a hold of your card, you have someone who's gotten a hold of your mobile device, and they are authorizing transactions. They are actually initiating transactions and originating these transactions as though they are you. And in some other cases, you also have incidences of friendly fraud where payment transactions that have been transmitted successfully then get represented at issuing institutions as though these transactions failed. Now, we all are sort of aware with how typical chargeback processes are orchestrated today, where you have carried out a transaction for one reason or the other, or in real time, your card is probably not with you and you're getting unauthorized debits with it. What blockchain technology can do is it's in two parts. One, for unauthorized debits, blockchain can help to enhance identity management, right? With that, and that way, you are able to leverage on other secure forms of authentication to ensure that these transactions can actually be authenticated by the right persons who own those particular devices or own those particular cards. And then for secondly, for typical issues relating to friendly fraud. Now, and this is going to be touching on something we already do at so today. A particular payment transaction has happened. You have the merchant bank, which we typically refer to as acquirer, and then you have the issuers bank, the cardholders bank, who we refer to as an issuer. In traditional setups, you don't sort of have visibility between these two parties until after an event which we call settlement has happened. That's when both parties can sort of relate and know, okay, who has got a value and who hasn't. Now, for when you put in blockchain to this, when you are orchestrating those transactions on a blockchain layer, what's typically going to happen is that the acquirer is able to tell in real time what's happening with the transactions, any authorizations you receive from the issuer standpoint, and the issuing bank is also able to tell the same thing as well. What that does is events of, say, of friendly fraud when they are being presented to an issuing bank can be declined in real time. And this is a very useful case we have seen, which we have been able to put to market even at zone. And something I feel will also benefit a whole lot more to drive. It's going to benefit a whole lot more of financial service providers to drive financial inclusion.
Thank you very much. That's quite exciting and interesting. But before we go on, there's something that affects financial system that if we don't talk about, we might not really do justice to the topic today, and that has to do with our regulation. We, in years past, we've heard too many stories surrounding blockchain and regulation. Let me ask you, what role do you think regulatory bodies can play in the adoption of blockchain technology in Africa? And what sectors do you think stands to gain from blockchain technology in Africa? Thank you.
Okay, yes. So the role of regulation or the regulatory bodies, the regulatory players is actually very essential to the drive, the growth, and the adoption of blockchain technology in Africa. Um, I currently work with Zone. Zone happens to be the first regulator, the first financial services institution to obtain a regulatory license from any regulator in Africa to be able to build some sort of financial services capabilities of blockchain. Now, when blockchain technology became a whole lot more popular with the advent of Bitcoin, then you then had Ethereum and the rest of this. What we saw was at some point we began to have a whole lot of players and a whole lot of meme coins just go into just become very popular globally. And what we began to see was um, for particularly for trading use cases, you began to see individuals who would say they have a wallet with a particular wallet provider. They have some crypto coins and that, and all of a sudden you hear that this particular provider has gone down, right? Um, the adoption of blockchain technology as a whole, or even its usage, some use cases have gotten some significant adoption, but generally as a whole, blockchain technology's adoption has been very limited. And this is in one part because earlier on, regulators were slow to catch on with the unique properties of blockchain technology and how they could actually help to accelerate some of the initiatives that they have today. So you have issues relating to awareness and enlightenment. And so you then have bad faith actors actually way ahead of the curve than regulatory players. And then you also have all of those benefits I talked about, ranging from financial inclusion to all of that. It's typically not going to be possible to have traditional payment setups adopt blockchain technology as you'd have it without a regulatory body, the central banks keying into this. Now we're beginning to see a whole lot of that with some central banks putting some very clear frameworks and clear policy relating to blockchain technology and how financial service providers who want to interact with this sort of technology can do that in such a way that it safeguards different users, it safeguards their customers as well. We are now also beginning to see that with investments, with trading, and with asset management as well. Recently in Nigeria, the SEC had rolled out its Federal Asset Service Provider licensing framework, and very recently as well, it issued licenses with two key players in Nigeria. What we are going to begin to see from that is gone are the days where you have a whole lot of people who trade in bitcoins or who trade in crypto say that they're going to work with or they're going to domicile their coins in an unregulated wallet provider because you really don't know when they're going to lock up, when they're going to close shop, right? You're going to begin to see more flows of these digital assets towards these regulated entities. That's what you're going to begin to see because underpinning financial services as a whole is trust. When you know that a particular entity is regulated, you would know that certain things have been put in place to ensure that end users can always be safeguarded. And that's where the regulator becomes very important. And having said that, and I would say Nigeria has been very well ahead of the curve. Recently today, we're beginning to see very clear regulations from the CBN, from the SEC, and we can also begin to expect more of this is going to happen with other central banks. I'm very aware that other central authorities are beginning to roll out their own CBDC initiatives, other SECs as well, other securities regulators in other African countries will begin to adopt these sort of approaches as well to provide clarity and ensure that end users can be safeguarded and their assets can be protected as well. At the end of the day, it's all about the end user. If I'm able to trust a platform because my regulator has approved that particular provider to say that I can do some business with them, then it's going to help accelerate the growth of blockchain technology as a whole. Now, moving a just moving a bit further on from financial services, I already talked about how blockchain technology could also help with some other civic duties, particularly relating to voting. I think the very unique properties of blockchain in itself can provide visibility to different electoral commissions of different African countries to ensure that we can have elections that are a whole lot more transparent as you would have it, which is sort of like a challenge we face in this part. So you have that on one part, you have that to financial services, you also have that with telecommunications as well. And it can help to reduce significantly the cost that most telco providers currently have to deal with today in providing services to end users. So this is just a handful of sectors where blockchain technology can become very useful.
Thank you very much. Thank you very much. A handful of sectors. I'll still stay within the sector in which we're talking about, um, and that's going to help us as we go further. Um, I'd like to ask you, how do you think blockchain technology can help solve the problem of the unbanked populations in Africa? That's the first one. And how is blockchain affecting or impacting remittances to Africa?
Okay. So these questions are already sort of related to the questions I spoke about too for financial inclusion and also for cross-border payments. For remittances happen to be a major subset of cross-border payments. And remittances, simply explained, is you have a loved one or you have someone, a friend, who is domiciled in another country, typically outside of Africa, and wants to send money back home to you, you know, in Africa. Yeah, so this is essentially the remittance sector. The remittance sector, as you would have it today, contributes significantly to the overall pool of foreign exchange most African countries and today, particularly speaking, the likes of Egypt, the likes of Nigeria. This happen to be the two leading countries, as you have it with remittances today, that earn the most from remittances. Now, I have already spoken to how blockchain technology, via the use of stable coins, can accelerate cross-border payments. This can also, or this also extends to remittances and how remittance transactions are orchestrated today. I think, in a nutshell, what say a sender, someone who is probably studying in the UK or in the US, or who has just started working and wants to send money back home to his parents and has a routine for doing that monthly, you can expect that they would have cheaper alternatives to propagate most of these transactions with back home in almost a real-time fashion. That's one of the major benefits, and it can significantly increase the value of remittances we earn today. This is also, and I know we already talked about the regulation, the regulatory interplay with blockchain technology, but this is also sort of where a clear regulatory framework helps as well, because I know for certain, being my niche, being my industry, that a whole lot of providers are beginning to look at this sort of look at digital assets to propagate most of these cross-border settlement transactions that can facilitate remittances. So that's something that it can actually significantly solve for. And then for unbanked, or should I even say underbanked populations as well, when you look at how blockchain solves for trust and how it helps to accelerate financial inclusion, ultimately this spreads out to unbanked populations and even underbanked populations. But even something I had not spoken about before would be to how CBDCs can actually extend to retail use cases, you are going to see a scenario where financial service providers who want to offer certain sort of level of experiences to unbanked populations will be able to do this leveraging CBDCs. And the whole idea here is that it's going to make their cost significantly reduced, right? And we're also beginning to see several use cases related to this, and that's something we can expect blockchain technology to solve for.
Thank you very much for that answering that question. You actually said something that is very, very important. You said there are a whole lot of players in the industry. So I would like to ask you, what is the role of public-private partnership in advancing blockchain technology in Africa?
Yeah. We're already beginning to see several initiatives and advocacy groups, and even from several regulators and several public institutions that are particularly targeted at driving awareness and enlightenment as it relates to newer forms of technology such as blockchain and even AI, which happens to be the buzz at this time. We're already beginning to see those sort of partnerships as you would have it. I think for Africa has sort of like taken the back seat, taken the back seat when it comes to different initiatives that have spanned globally and how they've been able to accelerate the economic prosperity for different other geographies as well. For the Industrial Revolution, Africa was left behind. Africa was nowhere to be found. Looking at our infrastructural gaps and our infrastructural challenges, emerging technologies such as blockchain, particularly, and even to an extent, artificial intelligence, provides a platform that enables us as a continent to bridge that gap as you would have it in comparison to other countries who are significantly way ahead when it comes to their human development index and other development indices. This sort of technology, because it makes it's actually very easy, right? It's very easy for you to, or shall I say, the barrier to entry for you, whether as an organization who wants to begin to explore with blockchain technology or even AI, the barrier to entry in terms of cost of capital you would require to invest in some of these initiatives are significantly low as compared to investing in hard infrastructure as you would have it. And then for resources as well, it's actually you can go online, you can go to YouTube, you can go to other um, um, LMSs online and actually begin to learn a couple of things related to blockchain technology. And this helps us to bridge that gap. So this is an area blockchain technology provides that potential as well as other emerging technologies.
Interesting, interesting. There's still room for collaboration, cooperation to develop the blockchain industry across African states. Um, Looking at it, developing blockchain across African states, what do you think are the social and possibly the economic benefits of a blockchain driven financial ecosystem?
Oh, it's actually very far reaching. I think the one thing about blockchain technology I particularly like is how it reduces the barrier to provision of financial services. In the old days, if you wanted to offer some sort of financial services, you wanted to offer a savings or checking account, you would need to obtain a regulatory license. You would need to set up a brick and mortar institution, and then you are also going to need to employ people who can go out there and get users, get customers to buy the chip. That's one hand. Now, there's only so much traditional brick and mortar institutions can do as it relates to financial inclusion. Um, that's on the one hand when you look at traditional financial services. Then you also then look at securities trading, right? If you want to, I'm not sure there are many individuals under the age of 35 today that understands or have some sort of enlightenment as to what it would take for you to invest in the leading stock exchanges of the different domiciles where they are in today. Many individuals between the ages of 18 and 35 will give you a bit by bit account of how they could probably get an account, the CSCS account, and purchase some stock for some of the NSE listed companies, as you see, particularly for Nigeria. And then you began to see millennials and also Gen Zs do a lot of trading with crypto. So this is something we are seeing, and you're trading with crypto, you're trading other digital assets, and it's creating significant economic prosperity for individuals in this pocket. So we're already beginning to see this. We're beginning to see social prosperity to individuals in this pocket. Now you can imagine how significantly more this is going to increase when you have a clear framework and a clear, just clear regulatory framework that gets that gets providers licensed and ensures that whenever you go and you get a wallet and you're doing your trading, you can be sure that your funds are safeguarded. There are many digital asset scams out there, right? Regulation can help in that instance. We already acknowledge and we've seen the benefits of blockchain technology with different use cases ranging from payments to digital assets. We've also seen how that further reduces beyond even financial technology, how that further reduces the access to the barriers to entry for most providers who want to provide financial services today, and how that even generates more returns. So, say you don't even want to trade, you just want to have your funds saved, you just want to have that invested. What most blockchain platforms does is that you can actually create a liquidity pool that ensures that you, as a saver, or you as the investor who is just probably saving some money with some financial service provider, can determine at what rate you want those your funds to be loaned out to a third party. So this blockchain's potential really, but we're already beginning to see other geographies lead in this particular regard, and Africa can also benefit as well from this.
Thank you very much. As we round up this edition of African FinTech podcast, let me just ask you what steps are necessary for African FinTech companies to adopt for blockchain successfully?
Okay, so it's two things. It's on the one hand, for the private sector and financial services companies or even organizations who are looking to explore in blockchain technology, you'll be required to make investment in educating your current employees, educating the current resources you have today. You need to make that investment to ensure that the awareness and the education is above what you would typically expect, right? I think that's the first step. Education is really important. And on the other hand, I know I've spoken about a whole lot about that on this podcast, is enabling regulation that can, just provide clarity and can also help to accelerate trust as well for participants who want to begin to do a whole lot more as well with blockchain technology.
Thank you very much. My question to you as we get to the end, from all you have said about blockchain technology, the socio-economic impact, the across African states, let me ask you this: what do you see as the future of blockchain and digital finance in Africa over the next decade?
Okay, so over the next decade, I think it's good to acknowledge that Africa hasn't actually taken the back seat when it comes to adoption of blockchain technology. I was scrolling on Twitter someday and I saw someone say we have the most crypto users per capita in Nigeria than anywhere else in the world. So um, Africa has actually not done so badly. If the trends are to continue, along with the sort of regulatory, very clear regulatory framework we are beginning to see in jurisdictions such as Nigeria, such as South Africa, and even Kenya, if these trends are to continue, I'll say that we are going to move from the point where we are at now to a point in 5 years where Africa would actually be leading the charge when it comes to blockchain technology and sort of being, um, would I say, a world leader when it comes to this. You're going to have a whole lot of thought leaders coming from this region. They are going to have a whole lot of organizations benefiting significantly from this. And we're going to move from a point where we were just trying to create, and a whole lot has been done. I know when I used to come on such platforms such as this 3 years ago, we needed to do much more job in even educating at the time about the difference between, say, blockchain technology and how it differs from a use case, which is Bitcoin. So we now have more people who are aware, but we still need a whole lot more. Being aware is not enough. Um, we need to awake to our potential and what we can do as it relates to utilizing this blockchain technology and utilizing other forms of emerging technologies to solve for what our unique challenges are. And we're not doing so badly right now as it is. I believe that if we continue on the trajectory where we are at, Africa can actually be a world leader when it comes to blockchain technology in the next 5 years.
Thank you very much. In the next 5 years, we'll see ourselves riding higher than we are right now. Well, thank you for being our guest today. But before you go, let me ask you this. It's a little bit technical. It involves your work and what you do in your company. Can you please share your organization's mission, vision, and how it aligns with solving Africa financial challenges through blockchain technology?
Okay, thank you for that. So, what we aim to do at Zone is to typically, Zone is a blockchain payment company, right? Um, so, what we are seeking to do is to ensure that anyone will be able to make a payment to any other person, wherever it is they are, in any currency of their choosing. We believe payments underpins commerce, and having systems and having platforms that make it very easy, make it frictionless for individuals and for businesses to make payments between each other is going to significantly accelerate commerce. Today, we typically we're a blockchain company. Our primary use case is payments. We are beginning to do a whole lot of that as it relates to domestic payments in our flagship country of operations, Nigeria. And at some point, we are going to be leveraging the same infrastructure to provide capabilities of digital assets management at some point as part of our roadmap. So that's just a summary version of what Zone is and what Zone does.
Well, Mr. Francis Obuka, the Vice President, Sales and Business Development at Zone, we've been talking about how blockchain is solving Africa's financial problem for the last almost an hour. And you've actually opened a lot of, I mean, even with my personal insight into what blockchain technology is and how it can really solve uh, Africa financial problems, and how it can be used in African financial systems generally. And we've gone through the regulatory, how regulators can also help. We've delved into how public partnership is important. We also spoke about the social and economic benefits. We went also and talk about the risk management, fraud, security, and you've also mentioned how fintech companies also can benefit from blockchain technology. And you also went into casting your, um, um, how do I put it now, the future of blockchain technology in Africa. You've actually dealt with all these questions very well. And it's just a very, very warm gentle session we have, but insightful, exciting, and mind blowing. Thank you, Mr. Francis, for coming on the program.
Thank you for having me.
And we expect to have you once more again some other times and at some other events because the discussion never ends. The discussion will always continue.
It should be my pleasure. Thank you for having me.
Thank you so much. This is the end of another edition of Africa FinTech Podcast. It's been a very exciting, a warming session today with Mr. Francis Ogbuka, the Vice President, Sales and Business Development at Zone. Until we see you again on the next edition of Africa FinTech Podcast, remain blessed. You all have a beautiful day. Thank you. Bye bye.